Hello and welcome to this module on the Federal Housing Administration loans, or the FHA loans. Let's begin with an overview of the Federal Housing Administration, or FHA. The FHA is overseen by the Department of Housing and Urban Development, or HUD, and the Federal Housing Administration, or FHA, was founded in 1934. It provides mortgage insurance on loans obtained from FHA-approved lenders. Let's talk about FHA Mortgage Products. There are several FHA mortgage products that you need to be familiar with. The 203B loan is a fixed-rate mortgage product offered by the FHA. The 203K loan is a product for houses in need of repair and rehabilitation. The 204G loan is also known as the Good Neighbor Next Door, and it's available for law enforcement officers, teachers, firefighters, and EMTs. And it's used for eligible single-family homes in revitalization areas. The 234C loan is used for condominium units, and the 245A loan is known as the Growing Equity Mortgage, or GEM, and the GEM features payments that increase over time. The 251 loan is the adjustable rate mortgage product offered by the FHA. The 255 loan is the Home Equity Conversion Mortgage, or HECM, offered by the FHA. This is a type of a reverse mortgage. The 513 loan is the Energy Efficient Mortgage, or EEM, offered by the FHA. Let's talk about FHA Qualification Requirements. Now, a credit score below 500 disqualifies the applicant from FHA loans. A credit score of 500 to 579 requires a minimum 10% down payment or 90% LTV. A credit score of 580 plus requires a minimum 3.5% down payment or a 96.5 LTV. And this is what attracts people to the FHA loan. A 96.5% LTV means that the borrower doesn't have to pay much for a down payment. The housing DTI requirement, or the front-end DTI, is 31% for FHA loans. The total DTI requirement, which is also known as the back-end DTI, is 43% max for FHA loans. Now let's talk about FHA's mortgage insurance. FHA requires two types of mortgage insurance: the mortgage insurance premium, or MIP, which is paid monthly, and the upfront mortgage insurance premium, or UFMIP, which is a one-time cost. Let's talk about the mortgage insurance premium, or the MIP. The MIP is the mortgage insurance paid monthly on FHA loans. Now, the MIP is paid for the life of the loan if the down payment is less than 10%. And the MIP is paid for 11 years if the down payment is 10% or more. Now, let's talk about the upfront mortgage insurance premium, or UFMIP. This is a one-time fee on FHA loans. It's paid at closing or financed into the loan, and it amounts to 1.75% of the mortgage amount. So for a $100,000 mortgage, the UFMIP is equal to $100,000 times 1.75%, which equals to $1,750. The UFMIP, as we said, can be incorporated into the finance mortgage. Therefore, it does not necessarily need to be paid up front. The maximum FHA seller concessions are 6%. And seller concessions cannot be used towards the down payment. FHA has loan limits. There are maximum loan limits applied to the base loan amount for FHA loans. And to learn more about FHA mortgage limits, you can visit the HUD website, or you can simply Google FHA mortgage limits and this page will populate. Now, the FHA loans require appraisals by FHA-approved appraisers, and the appraiser will perform a limited home inspection as well. The property, which is FHA financed, must meet HUD's minimum property requirements, or MPR. Now let's talk about assumption on FHA loans. FHA loans are assumable if the new borrower can qualify for the loan, so the new borrower must be creditworthy. Novation is the term used to describe the process of releasing the original borrower in exchange for the new mortgagor. And you want to remember the term novation here for the NMLS SAFE exam. This is a term used to describe the process of releasing the original borrower in exchange for the new mortgagor. And this concludes our module on FHA loans.